and a 1. Welcome, Saturday morning SMF MMTs. This is called Human Genome Sciences. The symbol is HGSI, and it's on a weekly SMF platform. Not your standard charting app. We own this. This deciphers everything. But what we're going to really talk about is in that human genome trade is that here in the brain we have to take into account that the close was 2490, so we know that mathematical equation right here. And that what we are going to look at is that this is a very hype-driven event by the public. We have 2 radio shows that talk about it, plus we have a series of intraday interaction, price interaction with the public perception, the gimmicks that they've done, the short sellers who put a bad spin on the name. We all know that Human Genome got a 13-2 approval on a wonderful drug called lupus treatment, and that in the last 50 years there has been no relief for the people who suffer medically in that population. And the SMF MMTs went all the way down to the wire. For about 6 months they've done their work, because biotech is a very high risk. But there was a specific, outside of a chart and outside of the price movement, there were specific criteria that had to have been met. And they did. And they were met on our checklist. One of them was 92% institutional ownership by the smart money. I didn't say dumb money. I said smart money. It's the only biotech in the last 15 years that I've been involved with biotech. Human Genome, Mario's been involved with Human Genome going back to 1998. But more importantly is, in the last 4 to 5 year cycle, SMF has been involved with all of its clinical trials and every milestone that they have met. They have met every one, including the big one. That was a 13-2 approval for lupus to move forward to December 9th of the final FDA. We know that the company in itself has been working 24/7 around the clock to produce the vaccine or treatments that they're being stockpiled now. Well, I'm sorry, if you're not going to get approval, people, this is where the public gets bamboozled by upgrades, downgrades, analysts, and everyone else alike. As that public interpretation, we know that the public, as being an expert in contrarian thinking, contrarian to what everyone else would be doing, because that's what markets love to trade off a lot of times, is that contrarian thinking. And basically the manipulations that came involved with Human Genome Sciences was that Citigroup came out and said, oh boy, Dr. So-and-so on the panel, because we were there, and we heard every question, and we went right down to the wire, and they voted 13-2 approval. And over the years and over this particular last milestone in Human Genome is that every time that Human Genome Sciences met its mile point or its end point, you know, a very big major event, and then we've always had the gaps. It's the only biotech that I know in the new age, as we are today, that did not pop $10 on that 13-2 announcement going into the FDA. We did the Dendreon trade. We got live videos, and we've been in them all. But we are really in this one because it's a very rare opportunity that it meets our risk management criteria. And because of that risk management criteria, the work involved in the intensity levels of that is that it's very rare that you can find one that you can say, hey, I'm going to put $60,000, $70,000 in it, or I'm going to own 6,000 shares of the name, or what it's going to be. It's going to be the income. The outcome is going to be the result. So what I'm really going to point out here is that when I look at this last week, When they got 13-2 approval, there was a huge gap. And this particular half bar is 24.69. We are closing above that right now. That price action movement equals the total movement from the top down to the bottom, and total movement was 3.78 right here in VO1. That's mathematically. The bid and ask ratio, I can't give you the real number there, but I can give you the number right here, that 2.4. So basically, we still have a negative ratio of 2.55. What we're going to look at is that going into December 9th and starting is how human genome works its way up to this bar right here in the short term. And this is all very short term. And basically, this bar here is going to be 26.59. That's this one on 11/1. This is a weekly chart. And that number is 26.59, because it is. So basically what we're going to do is we're closing above 24.90, but on the way up, these upper lines right here, each one of these delta lines is very contracted. It's only 22 cents a line in our platform back in here. And we can see here that when we look up above the marketplace, let's get this down here where we can kind of scroll over, we already have the prices made. And basically what we're going to be looking at in here is we would have to go up. Here's the delta to price. So that's 9 deltas up. But a delta is only 22 pennies, so that's like $1.86 or something like that. We're going to be looking in here to get our answers, because our answers are calculated before those moves happen, and this is the upper end of the move. So if we have an approval, we can see that way above the market over here, you can go 40 deltas higher at 22 pennies a delta. See, in the platform price is different, but it's 22 cents. It's a very small delta. Not like Google, that's $5.98 on a weekly delta move. And that this applies on our SMF platform and our weekly platform. So the brain is constantly calculating, and basically 40 deltas above the market's 33.62. 30 deltas above the market is 31.42. When I scroll down here and I take a look at where we were, we had this, when they got approval, they opened the stock in after hours, and the after hour prints and the public started coming in up here in after hours. It was above 28.60 right here. MMTs were here, they know that, and then they put a bad spin on it. So pre-market, they walked the price all the way down here, and the big boys came in. And the same big boys that were downgrading it, through our investigation, we found out that during the issuance of the downgrade by those two firms, is that they were coming in and buying it. Because we went back and we took a look at their downgrade statement, but then we also went and we took a look at, they were accumulating it. Bernstein being one that had downgraded the stock. And they didn't downgrade it to a sell, they downgraded it to get the public to react and sell out of their positions, where we have been constantly buying these positions. Yeah, we have. If you don't think so, take a look right here. It's a $30 call. We've got 310 call contracts. That's just that one trade, not to mention several others. And basically, we went through the whole thing about these contracts and how they deflated them to buy them. And that's how they make their money. But the public will never know it. Why? Because they don't understand their agenda. Their agenda and the public agenda is the difference between night and day, as it always has been and always will be. And what I'm going to tell people is that as we go, these are your delta gaps up. This will change dynamically, because if it expands, then the delta price to target, the price to delta is the price to delta in the platform. So if I go up 24 deltas, that equals a $5.20 move. And that's about what that gap would be at the low end. And that's going to put you above the $30 handle. And not only that, when you're holding 6,000 shares of the name, that's a nice gap. That's $30,000 or $32,000 gap. Yeah, it is. Talk is cheap. Show me the money. That's exactly what we're going to show everyone. But we've done a special. We probably have the best documented biotech series ever on the internet, because it was all done live as we're doing now. It was all done during the live market entries with the markets live entries and live purchasing, and we have documented the manipulation very well. In fact, we have probably documented the pro and the con and the way that insiders do stuff. There's a lot of things on the internet about insider trading and all this and that. Well, what we found out during our rigorous investigation, like we always do, is that we get down to the root of the problem. That's what we do. And not only we find out the people that engaged in those events, and we narrowed them down. So basically, once the public is stripped out of this move, once the public is stripped out, up here at this $30 area is exactly where that pop would be. Because what's going to end up happening is that everyone's interpretation, everyone's negativity, I've never seen a company